Hey traders, welcome back to TakePropips, your go-to channel for everything Forex trading. Today, we're diving deep into one of the most crucial skills every Forex trader should master, chart analysis. Specifically, we'll focus on the best chart analysis techniques for high-liquidity Forex pairs, like EUR, USD, GBP, USD, and USD, JPY. These pairs are where the big players are, so understanding how to read and analyze their movements can give you a significant edge. Now, before we dive into the technicals, let's set the stage. Why do we focus on high-liquidity pairs? Well, liquidity means how easily an asset can be bought or sold without causing a significant impact on its price. High-liquidity pairs have more traders involved, which often leads to more stable trends, less slippage, and faster order execution. As a result, they're great for both short-term scalpers and long-term traders alike. So, let's talk about the first essential chart analysis technique for these pairs: support and resistance levels. You've probably heard about this 1,000 times, but trust me, they are the bread and butter of Forex trading. Support is where the price tends to stop falling, and resistance is where it stops rising. Think of these levels as psychological points where traders make decisions. When analyzing high-liquidity pairs, support and resistance levels are even more reliable because there's so much volume behind them. Institutions and retail traders alike respect these levels, and they act as triggers for buy and sell orders. But it's not just about spotting these levels, it's about understanding how the price reacts around them. Now, here's a pro tip. Don't just rely on horizontal support and resistance lines. You should also use dynamic levels like moving averages. For instance, the 200-period moving average is a favorite among institutional traders. It helps to determine the long-term trend, and when price touches it, it often reacts significantly. This is particularly important for pairs like EUR, USD, where trends can last for a long time. And speaking of trends, let's move on to trend lines, another critical tool for chart analysis. Drawing trend lines helps you visualize the direction of the market. They act like diagonal support and resistance levels, helping you spot potential breakout or reversal points. For example, in a high-liquidity pair like GBP, USD, you can connect the recent highs or lows to see if the trend is strengthening or weakening. Here's where it gets interesting. You can use multiple timeframes to draw trend lines. So, let's say you're looking at the 1-hour chart. You can draw a trend line, but always zoom out to the 4-hour or daily chart to ensure the larger trend supports your analysis. Remember, trends on higher timeframes have more significance, especially when big players like hedge funds or central banks are involved. The next technique I want to highlight is the use of candlestick patterns. Candlestick patterns give you a visual representation of price action, showing the battle between buyers and sellers. High-liquidity pairs like USD, JPY are known for responding well to candlestick patterns because there's enough volume behind each price move. Patterns like the engulfing candle, hammer, or shooting star can signal potential reversals or trend continuations. Don't just take these patterns at face value though. Always confirm them with other tools like moving averages or oscillators. You'll find that using multiple indicators increases the probability of a successful trade, especially in fast-moving markets. Speaking of oscillators, let's not forget about the Relative Strength Index, or RSI. This is a momentum indicator that tells you when a pair is overbought or oversold. For example, if you see the RSI creeping above 70 in EUR, USD, it might be time to consider a sell trade because the market could be overbought. On the other hand, if it's below 30, the pair might be oversold, signaling a buying opportunity. But one thing to remember with RSI is that just because something is overbought or oversold doesn't mean the market will reverse immediately. High-liquidity pairs can stay in these zones for a while. That's why it's important to look for RSI divergence, where the price is making higher highs, but RSI is making lower highs. This often signals that the trend is losing strength and could reverse soon. Now, here's where I want to introduce you to something that can take your chart analysis to the next level: automation with the TakePropips Trading Management Solutions EA. It's a powerful tool designed to streamline your trading and enhance your analysis. The EA can automatically draw support and resistance levels, detect trends, and even place trades based on signals from indicators like RSI or moving averages. One of its standout features is the trend scanner, which gives you a quick glance at the current trend direction across multiple timeframes and pairs. This is especially useful for high liquidity pairs, where trends can shift rapidly. It also features an advanced order management system, allowing you to set trailing stops and partial closes, helping you manage risk more efficiently. Another excellent feature is the AI-powered market forecast, which uses real-time data to predict price movements. Imagine getting automated forecasts for pairs like GBP, USD or EUR, USD, so you know where the market might head before you even place a trade. This tool is particularly useful when volatility spikes, such as during major economic news releases. And speaking of news, you can even use the Trading Management Solutions EA to keep track of important economic events. It can alert you to upcoming news that may affect high liquidity pairs, allowing you to stay ahead of the market. For instance, if you trade EUR, USD, you'll want to be aware of major economic reports like non-farm payrolls or ECB announcements that could cause sudden spikes in liquidity. But what really sets this EA apart is its ability to work across different trading styles. Whether you're a scalper who trades high liquidity pairs for quick profits or a long-term trend follower, the Trading Management Solutions EA adapts to your style. You can even create your own custom strategies without coding, perfect for traders who want more control over their trades but don't have the programming skills to build an EA from scratch. In conclusion, mastering chart analysis for high liquidity pairs requires a combination of support and resistance levels, trend lines, candlestick patterns, and momentum indicators like RSI. But with tools like the TakePropips Trading Management Solutions EA, you can automate much of this analysis, freeing up more time to focus on refining your strategy. If you're serious about taking your trading to the next level, consider using the EA to complement your manual analysis. It's like having a personal trading assistant that works around the clock, so you never miss an opportunity. Thanks for watching. Don't forget to subscribe and hit the bell icon so you never miss out on our latest trading tips and strategies. And if you want to learn more about our Trading Management Solutions EA, head over to TakePropips.com for all the details. Happy trading!